Aloha. Thank you for joining me for Java. This is for Wednesday, January 24th, 2024. A lot to cover, so I'll get right into it. We've got the MMRI, our favored risk indicator, still in high zone around 263. So basically, the story is a consolidation this morning. So looking at the relative strength of the dollar and the 10-year yield yesterday, they were up and they put some pressure on stocks for a while. Kind of opened up as they started retracing, uh, allowing stocks to run a bit. So we did have the S&P 500 reaching another high. Right now, we've kind of got a mixed board. As I said, it's consolidating for the next move. So futures are in the green. Sentiment generally green still, buying and risk rising again. So looking into a few of the reasons for this, we've got earnings, and so that's kind of positive, but we've also got November's selection cycle. So the pricing in wins by Trump. He's very positive for the stock market was last time, and they're kind of looking forward to him taking the reins, if you will. There are very specific stocks that had a very green day yesterday because of this. So we're watching earnings for Tesla after hours today. We've also got an update on Boeing. So, more pressure and issues for the airlines. They did have an issue with one of their nose wheels came off on one of the flights. So, expect them to drop a bit more, still holding with the levels I'm looking at. We've got Bitcoin did recover. It's above 40,000 again after the ETF sell off that we were expecting. So that one consolidating for a move higher, in my opinion. Longer term, not financial advice. Do your own research. However, that's my opinion. We've also got mortgages. There's been an increase. So we've got more buyers coming into the home market finally since rates have dropped a bit, although kind of the prices are beginning to drop in several markets, but it's not anywhere near what I would call strong at the moment, but there is a bump in mortgages at the moment. So we're looking at getting data for PMI today, as well as crude oil. But what we're really going to be watching is tomorrow we are getting the GDP, as well as jobless claims and new home sales. So Fed will be looking at these. They're looking for cues to the rate cuts. I think the market is realizing that they have overpriced more rate cuts than the Federal Reserve will do. However, we'll see what happens with that. So, on to what central banks are doing. We've got China cutting their bank reserves. So, they had a large down day in their stock market, and they are trying to give them a bit of a bolster. So, that's their move from yesterday. Asian stock markets are up this morning. So, we've got Bank of Canada holding their rates as we expected. We were talking about this. Looking forward to the GDP data in the US. And we're looking at Europe's top economies. This is talking about how they're facing a tough times at the start of 2024. So the UK in particular, and Germany. Germany is manufacturing powerhouse, and then economically the other ones are beginning to show cracks. So with that, we've got the ECB set to hold rates, talking about their market with their cuts timeline. However, as we were talking about before, they have to kind of maintain pace along with the United States. The central banks cannot allow their currencies to go into a large differential with the US dollar yet. There's too many holdings between the banks, and it would cause too much of a rupture. So I expect they will follow along with the Federal Reserve in whatever they do. That's why they move in lockstep. So we have this other article. This is actually Charles Payne. So he's commentary on Fox talking about whether we're headed for a 1929 style market collapse and the similarities between now and then. So we've had most people talking about basically comparisons of the 70s. And I think we're in a very different situation, the inflation and the issues that we're facing between oil, basically. So let's go deeper into that. We've got spot container shipping rates going above 173% now, they're reporting. because of what's going on in the Middle East and they're bombing those containers. So we talked about this before. It's going to last much longer. They were initially saying a couple of weeks, and they were going to get this back online. So this inflation will filter down. Prices will rise. There's going to be shipping, supply chain issues. So we'll be looking for those to start happening. So in the meantime, we've got German firms in China saying that the economy there is on a downward trajectory. So, a couple of auto manufacturing firms that had moved over there, and now they're kind of seeing that there's a little difference with the economy. And they're talking about half of the companies are saying that the investment appeal is falling. So, we'll see how that works out, whether they want to move back in or if they do a different structuring. So, we've got more than 47,000 UK businesses starting this year on, they're saying, on the edge of collapse. And this is from a company that does restructuring for businesses, saying their financial distress jumped over 25% again. So pretty harsh for businesses over there. And that's going to be very difficult for them to move their economy if they don't have the businesses behind it. So back over to the United States, it got about talking about the game industry bracing for a year of closures in 2024. And again, so this is layoffs. And they're hitting a third of game developers last year through to this year, talking about unionization and then artificial intelligence also taking some of these jobs. So, a couple of other, they're talking about how the economy is so great. And the reason I want to bring this up is because this is a larger debate that is coming in now, talking about how strong the economy is. We've got eBay's cutting 1,000 jobs, reducing their contractors to sharpen focus on their profits. And you'll hear that over and over again. So we've got Aberdeen is to cut 500 jobs in a bid to boost profitability of the investment company. I highlighted that because that's what we're going to see moving forward. So when you see companies cutting jobs, they're boosting their profitability so their stocks will go positive. So we've got Brex cutting jobs, talking about the consumer pressure, and we've got SAP is another company restructuring and either, so they're either dropping 8,000 jobs, restructuring their salaries, or they're basically taking lower paid people, moving them up the chain and retiring the older ones that are making more money. That's all things companies do in order to increase their bottom line. So, in case you are one of these people that are laid off, they put out this article and really, kind of making a play on words, bounce back better. Tips for financial resilience in the event that you get laid off. So you could just read this and talking about how mass layoffs, people are struggling to get back on their feet. And this is in particular to the United States. However, this is a global issue as we're seeing in the UK and will spread to Germany very soon and from there. So we had ADM, company ADM. Yesterday, there was a probe into their financials. And with that, that made their stock plummet, their accounting investigation. So it's an agricultural trading company. We'll see what happens with them. They're in the spotlight a bit. So Netflix did really well. They came out with their earnings. And even with their booming earnings, they're talking about price hikes in the near future, that they will occasionally ask members to pay a little extra. So this was because they stopped all the password sharing. So they increased their memberships tremendously and came out with profit, but they're still looking at hiking. We've got more inflation on the horizon. And this is why I'm saying the market pricing in all these rate cuts is premature, because the Fed has to watch this jump in inflation that might be coming. So we've got Puma shares sinking as consumer struggles weigh on outlook. So the reality is sinking and the consumer is having difficulty. And this kind of sums it up, talking about the recession red flags. Wall Street and Main Street at odds about the economy. Well, not really, because the market and the economy are two separate things. So market booming, the economy is deteriorating rapidly. So, question for you, is this greedflation or is it the downturn? I'd like to see your thoughts in the comments if you have anything on that. And this, talking about Americans' economic outlook brightening as inflation slows and wages outpace prices. Personally, I disagree with this, but I'd like to hear your comments. So we've got a couple of short lava updates. There was a large data breach. So this was through basically they attacked Venmo, Snapchat, also X, which is formerly known as Twitter. A lot of these accounts, a lot of the information flooded out to the internet. So if you had information in these, you may want to consider changing your passwords or looking into your account information. Then the last thing I wanted to bring up is this is causing quite the stir. So having an open border, we know what's going on. I have to watch what I say off of this. However, talking about photo capture for coming in illegally is voluntary, and then also the information that you give, and that you don't have to go through the same stringent vetting, if you will, as if you are a United States citizen. So this is what's going on down there. We don't know who's coming in. Anyway, we just want to wish you a wonderful day in general, Green Trading Day. Live, trade, and think outside their system means buy physical assets. So until I see you again, my friends, stay free.